Illustration number 8. Mrs. AXL Limited has suffered from continuing losses. See, once you see the term, immediately decide whether it is internal reconstruction or other model. The accumulated deficit of the company now stands at 25 lakhs. See, 25 lakhs, which far exceeds the paid up company's equity capital. So, equity capital is 20 lakhs and the accumulated loss is more than that. So, definitely, if the company is wound up, the equity shareholders will get nothing. So, out of the capital 20 lakhs, the loss will be adjusted here. Actually, their capital itself negative. They don't get anything. So, hereafter, the equity shareholders are not interested to run the business. A reconstruction plan has been undertaken to return the operations of the company a profitable level. So, they plan to go for a reconstruction. The most recent balance sheets given here. Non-current liabilities, non-current assets and current assets are given in 4 schedules. Okay, we'll go directly the adjustments here. So, in the adjustments, the following further information is available. Number 1, the debentures are secured on land and buildings, the current market value of which is 9 lakhs. The other land and building have the market value of rupees 9 lakhs, 18 lakhs. Okay. So, what happens? Here, the land and building. Here, the land and building. Okay. Being 25 lakhs, where a part of land and building secured for borrowing the debentures. Currently, the value of that being 9 lakhs and 18 lakhs being the other land and building. Anyhow, today's land and building value is 27 lakhs. As per the books, the land and building value is 25, but today's market value is 27 lakhs. If the market value is higher than the book value, you are pretty happy. You purchased for 25, today it's worth 87, you are happy. Out of the 27 lakhs worth the land and building, 9 lakhs is pledged for issuing the debentures. The current value of the plant and machinery is estimated to be 6 lakhs. This is currently valued at only 6 lakhs. 10 lakhs 50,000 rupees is the book value, but we valued at 6, so we lose 4.5 lakhs currently. Right. And debtors and stocks have a recoverable value of 19 lakhs 25,000 and 17 lakh 50,000 respectively. Debtors and stock. Debtors 9 lakhs 25,000. Stock has a recoverable value of rupees 7 lakhs 50. In these cases also we face loss only. As per the books, the stock valued 950. Today's recoverable value is 7.5 lakhs. So we lose few lakhs in this. Debtors also 19 lakhs 75,000. Today's recoverable value is 9 lakhs 25,000. We are losing 50,000 rupees. Okay, 19 lakhs 25,000. Anyhow, we are losing 50,000 rupees. Is that clear? Point number 2, point number 3. Point number 4, preference dividend is in arrear for 4 years. The debenture interest is due 2 years in arrears. Okay. Now, whenever there is any arrear of interest or preference dividend, cross verify whether the arrear is given only the adjustments are within balance sheet. If it is given in the adjustment, no need to pay it off, then it will be having no use. It's simply neglect that. Okay, you can neglect that. But if it is not appearing in the balance sheet, given in the notes, but later you are supposed to pay, then it becomes your liability adjusted in the capital reduction account. The reconstruction plan duly approved. Anyone will be do a cross check whether it is available in the trial balance sheet or not. Right. Secured debenture and arrear and debenture interest 2.5 lakhs. So 10%. 10% and 12 lakhs 50,000 being 1 lakh 25,000 for the 2 years, 2 lakhs 50,000 rupees. From this, it is very clear. This debenture interest, which is in arrear for 2 years, already available in the books. If the debenture holders forego to pay this one, we are pretty happy. That will be our gain. Is that okay? Similarly, preference dividend. Okay. Any arrear there? So nothing is mentioned regarding this one. In case of preference dividend, this is not given in the text. Not available in the balance sheet. Not in balance sheet. Reconstruction plan duly approved by the court. The shareholders and the creditors involve the following actions. Preference shareholders are to forego their arrears of dividend and to accept equity shares in lieu of the preference shares. So what happens, as it is not given in the balance sheet and preference shareholders say we no need to collect this, so you just forget about worrying payment of this preference dividend. We are pretty happy. As we have not considered this being the liability, no more required to be payable, no need to pass any entry here. And instead of that, the preference shareholders no more will be preference shares. Hereafter, it will be converted into equity shares, right? We try to pass those entries now and then whenever it come across here. Let's see. The 10 lakhs preference share capital will become equity share capital to equity share capital. What's the value? 10 lakhs, 10 lakhs. Nothing stated. We assume this value remains the same. Okay. Now, preference shareholders are to forego their arrears of dividends and to accept equity shares in lieu of the preference shares. First adjustment is over. Second adjustment, the equity shares are to be cancelled in exchange for 20,000 equity shares of rupees 1 each. Right, equity shares. So what happens? 20 lakhs is the overall equity share capital. For the 20 lakhs, now we are offering only 20,000 1 rupee shares. So if you have invested 100 rupees in this company, hereafter you will get only 1 rupee. 99 rupees has gone. Okay, you have to now beg to get this 1 rupee. Like, that's all. So then 100 rupees equity share capital upon debit, the value being 20 lakhs, now converted into 1 rupee equity share capital of rupees 0.2 lakhs. So from this, there is a gain of rupees 19.8 lakhs. 19.8 lakhs. That will be known as capital reduction. The preference shares are to be cancelled in exchange of 10,000 equity shares. Okay. For the preference share also, we offer only 10,000 1 rupee preference shares. So I can make the changes here. I thought equivalent number, as the detail is silent, I just posted this way. Now I came to know for the 10 lakhs worth preference shareholders, we are offering only 10,000 1 rupee preference shares. Okay. Equity shares. So 0.1 lakh. So remaining will be our gain named as capital reduction, which is 9.9 lakhs. So we got 9.9 lakhs gain from preference shares and 19.8 lakhs from the equity shareholders, right? So we have completed all the 3 journal entries. Now, the debenture holders are to waive 1,25,000 of interest in arrear in exchange for 10,000 equity shares of rupees 1 each. Okay, debenture holders. So now they are waiving 1,25,000 of interest in arrear in exchange for 10,000 equity shares of rupees 1 each. What about the rest? Okay. The interest rate on debenture is to be raised from 10 to 12 later on. Okay. We'll do these two together with the single entry. We can pass for these two put together later on. Fifth one, 40,000 equity shares are to be consolidated into 4,000 equity shares of rupees 10 each. Okay. 40,000 shares. Now, how many shares we have? Here is 10,000, here is 20, 30,000 shares only. Another 10,000 new shares issued for the debenture holders. Let me pass the entry for the fourth one. Okay. Fourth one. What's that? Debenture interest. Debenture interest account debit to 1 rupee equity share capital. Actually, debenture interest being 2.5 lakhs, out of that only 50%, 1,25,000 is cancelled. In return, they will be offered 10,000 1 rupee equity shares. Okay. See here. The value being 1.25 lakhs. For them, we offer only 0.1 lakh equity shares. And then the difference will be my capital reduction 1.15 lakhs. Is that clear? Now, after that, 40,000 1 rupee equity shares are converted into 4,010 rupees equity shares. Earlier, we converted that into small number denomination, means subdivision. Now it's consolidation. 1 rupee share is converted into 1 10 rupee shares. Like, so that's all. For that, the entry here being 1 rupee equity share capital account debit. How much we have? Here is 10,000, here is 20,000, here is 10,000. Overall, we have 40,000 rupees, 1 rupee shares. Now all the value is converted into 40,000, but 10 rupees equity shares, like to 10 rupees equity share capital. Because of consolidation, of course, we don't gain anything. Then next one being all right issue of 25 equity shares of rupees 10 each for each 10 rupees equity shares held in is to be made. So now they have made a right issue. Right issue is nothing but further issue to raise the development of the organization's fund requirement. While issuing further, the shares will be offered to the existing shareholders. Here also the existing shareholders. If the existing shareholders are holding one share, they will be offered with 25 and they have to accept this. They have to accept this in internal reconstruction. So currently we have 4,000 shares. For every one share, 25 is offered means for 4,000 shares, how many shares are offered? Come on. So maybe 1 lakh shares offered, per share value being 10. This is new issue. So you just pass the new journal entry for the new issue. So here the journal entry being bank account debit to 10 rupees equity share capital. The value being 10 lakhs. New issue. Then seventh one is the interest rate on debenture is to be raised from 10% to 12%. Right. So here 10% secured debenture being 12.5 lakhs. The entry remains the same, but rather than 10%, it becomes 12%. So for this, the entry being 10% debenture account debit to 12% debentures. Okay, the value being 12.5 lakhs. 12.5 lakhs. Then trade creditors do not agree to any reduction in their claim but are willing to supply the reconstructed company and to continue giving credit on normal terms. So creditors are not willing to reduce any of their claims, but they will supply the subsequent products also with the same earlier credit period. Earlier we may enjoy 2 months or 3 months credit period. We purchase and will settle that money only after 2 or 3 months later. Now they say, okay, we'll continue the same manner. You can purchase from us. You will be enjoying the 3 months. Okay. So because of that one, we don't have any current financial benefits. Leave it. No need to pass any entry for this 8th one. And 9th one, the bank loan overdraft is to continue, but the loan is to be secured by a floating charge over the assets of the company. So we still have the bank overdraft, but they demand some security. So we now give the security. The security will be in the form of floating charge. Floating charge means they have the rights on any of the assets you have. If you default the payment, immediately the lender will repossess whatever the assets we say the company has. Is that okay? That's called floating charge. Fixed charge means based on a particular asset, they can recover. So in case of floating, they have the rights on any assets for their own due. Clear? Of course, it's only a legal document, has no monetary value. It's not a financial transaction, so you no need to record any entry for this one. So we don't have any entry here. The debentures are to be given fixed security on the total land and building. So for the debentures already, we have the security. Now also we have to give the security on fixed security on the land and building. Total land and building. It's not existing land and building. All the land and building put together will be the security for the debenture holders. Earlier, so out of the debentures, no. So hope it may be 9 lakhs is secured. 9 lakhs is secured. Now full share means full value will be secured for the debentures. Any of the fixed debenture securities. Fixed security is also only a transaction, not has any monetary value, no need to pass any entry. The cost of reconstruction scheme are expected to be 50,000 rupees. It's a loss. Expenses like you can simply debit that. So CR account debit to bank for expenses. This value being 0.1 lakh. 0.1 lakh. Oh, 0.5 lakhs. Okay. 0.5 lakhs. And this one 9 plus 18. What about the plant and machinery? 6 lakhs. What about the stock? 7.5 lakhs. Debtors being 19.5 lakhs. Okay, so almost we have completed all these things. You are required to prepare the following: a statement showing the amount of capital reduction required, how much we are in need, a statement showing how the total reduction is to be achieved as required. Okay, so if you are in need of 1 lakh rupees capital reduction, how do I arrange this? The method of arranging the capital reduction requirement may be asking the various contributors to forego some of their due, and enhancing the assets value will be the source for the capital reduction. And you have to pass the journal entry and balance sheet as usual, right? Let's see. Now let me pass the journal entry for what? This one, okay. Land and building appreciated by 2 lakhs, so it's a gain. So land and building account debit to capital reduction, the appreciation in this case being 2 lakhs. And in case of other cases, we have loss only. Capital reduction account debit to what are the losses we have? Plant and machinery lost by 4.5 lakhs, and stock in trade we lost by 2 lakhs, and debtors we lose how much? Is it 19.25, right? Yeah, 0.5 lakhs being the loss. Overall loss being 7 lakhs. Already we have these transaction entries also. Hope we have completed all the journal entries. Yeah. Now, in case of fictitious asset, profit and loss 25 lakhs, that should also be transferred to CR account. So I clubbed here 25 lakhs. Then it becomes 32 lakhs. Am I right? 32 lakhs. Now, what is the question? You have to find out capital reduction required and source for the capital reduction. Okay, capital reduction. Clear? So, required is nothing but the item debited. Source is in the credit side. Usually, you do debit and credit like whenever there is a loss, that loss is debited. If the gain is arising due to reduction of liability, will be credited. But the statement like they have asked you, okay, statement showing the amount of capital reduction required. Required is nothing but in your capital reduction, whatever the value you debit, that's what about the requirement. And statement showing how the total reduction is achieved, which is nothing but the amount you usually credit. Clear? So that's all. Otherwise, you can write in vertical form. First, you write down the requirement and then subtract the source you made arrange for that. Is that okay? That way you can do. CR to bank. This is what about the payment you make for the expenses. Land and building, you get the appreciation, so it's a gain. And here, for the writing down of plant and machinery, stock, debtors, and P&L account. For all this put together, we are in need of 32 lakhs. And preference shares, because of that, we gain how much? 9.9 lakhs. Because of the equity share capital, we gain how much? 19.8 lakhs. And because of the debenture interest, we gain 1.15 lakhs. That's all. So the requirement being 32.5 lakhs. How can we arrange for the capital reductions requirement? By appreciating the land and building, we realized 2 lakhs. Preference shareholders foregone to the extent of 9.9. Equity shareholders also forego their commitment by 19.8, and debenture interest also we waived to the extent of 1.15. Yes. Now, plant and machinery 4.5 lakhs, stock 2 lakhs, and profit and loss debit balance 25 lakhs. Another one is this one. I think 32.5 lakhs, correct? Huh? Which one?
32 lakh 85.
So what? Okay. Total being 32.85 lakhs. Here 32.5. We have surplus. We arranged reduction more than the requirement may be transferable to the capital reserve. Capital reserve. Is that okay? So for that the entry being capital reduction account debit to capital reserve. The value being 0.35 lakhs. CR is tallied. Now come on. Record all these things here. 10% debentures becomes 12% debentures. So 10% is scored out. Instead of that, we now get 12% debenture with rupees 12.5 lakhs. 12.5 lakhs. Arrears of debenture. The next one is bank. We make a payment of 50,000 rupees. Because of the first issue, we get 10 lakhs rupees. 10 lakhs. 50,000 paid, 9.5 lakhs your cash. Already we have 25,000. So now your cash balance being 9.75 lakhs. 9.75 lakhs. Land and building inflated by 2 lakhs. Now it is 27 lakhs. Plant and machinery reduced by 4.5 lakhs. So 6 lakhs. Stock decreased by 2 lakhs. Hereafter it's 7.5 lakhs. Debtors also decreased by 50. Then it is 19.25 lakhs. 19.25 lakhs. Profit and loss completely scored out. We don't have any profit and loss account balance. We don't have any profit and loss balance. It becomes 0. Okay. Clear? We have incorporated that in the next page itself. So I don't want this anymore. Right. Next one is all about preference share is totally cancelled. Becomes 0. Instead of that, equity share emerges. The existing 100 rupees equity share is cancelled. 100 rupees equity share also cancelled. Instead of that, a new equity share face value being 1 is emerged. 10,000 in the credit, 20,000 in the credit, 30,000, another 10,000 in the credit, so 40,000 credit. All the 40,000 rupees available in the credit side gets cancelled. Because of that, we now get new 10 rupees equity shares for rupees 0.4 and here another 10. 10.4 will be the new capital balance now you have. 10.4 lakhs. Face value hereafter 10 rupees. Face value hereafter 10 rupees. Clear? Then what happens? Debenture interest 1.25 cancelled. Out of 2.5 lakhs, 1.25 lakh is cancelled. So hereafter it's only 1.25. We don't have any balance here. Capital reserve. New account emerges, which is the capital reserve. So here you can name this being capital reserve. Reserves and surplus being 0.35 lakhs. This is nothing but capital reserve. Capital reserve. Now, as per the schedule number 1, the total being 13.75 lakhs. 13.75 lakhs. Schedule 1 being 13.75 lakhs. Current liabilities, we have not touched, that remains as it is, so 45 lakhs. And current assets, 33 lakhs is the new value. Non-current assets, 33 lakhs. Old one is cancelled. And then current assets, give the total of these three. 29, 36.5. Am I right? 36.5 lakhs. So this is 36.5 lakhs. Now do the summation. I think 69.5 lakhs will be the total agreeing in both the sides, right? 69.5 lakhs. I started by 6:12. I started this illustration by 6:12. Now the time is 6:37. Almost we have consumed 25 minutes. It's a decent because I'm interacting, giving the lectures and all, changing the pages. This is the maximum time you can take to solve this illustration. Is that clear? Yeah, come on, make a note of it.